Hey folks, welcome to another challenge update for Alphabet options, and it finally happened. We knew this was coming eventually. Finally, a big red week after 4 really green weeks. So if we take a look at the daily chart, you can see the stock went up as high as 108 last week, and then it dropped down to close at roughly 94.60. So that's a 13% intra-week move for Alphabet, which is not very common. Unfortunately, what does that mean for my options? Well, I had a 99 short put and a 96 short put, and because the stock price closed below both of these short puts, I got filled on both of these. So I bought 100 shares at 99 and 100 at 96. The 108 short call obviously expired way out of the money. So to summarize week 30, I didn't make too much money in premiums, and I bought 200 shares at 97.50, which is the average of 99 and 96. And that takes my total share owned back up to 300. So the good news is, even though Alphabet dropped from 104 to 94, which is like a $10 drop, because I was only holding 100 shares at the time, I didn't take on too much of a loss. And I have dropped my average cost down to 98 from 99. So I don't need Alphabet to bounce back as much in order to break even on my shares. And ultimately, I was down $2,000, which takes my overall profit from $6,500 to $4,500. Still the second highest level since I started this challenge. Now, CPI comes out tomorrow morning, so I have to be careful, but otherwise, Alphabet has broken out of this green channel pretty convincingly. And if we take a look at where the stock is trading at today, it's at 94.26, so a little bit down from Friday, which is surprising because SPY is actually up. The overall stock market is up 0.86% today, but Google is down, which tells me that this stock is weaker than the index. So I'll probably lean towards being bearish on this stock for this week. The other thing is, if we look at the MACD down here, whenever the MACD is over the zero line, which is pretty much this point right here, and there is a negative cross, when the blue line dips below the orange signal line, then it usually signals a sell-off in the next week or so. So if we look back to history, you can see over here, blue line crossed below orange line. What happened to the stock over the next couple weeks? It went down. Moving over to the left here, it's the same thing, MACD crossing below, and the stock went down over the next 5 to 10 trading days. Over here in April of last year, same thing, MACD cross, stock went down. And even back in 2021, just showing this again, there's a slight cross over here if you can count that, and over here as well, and in both cases, the stock went down in the next week or so. And right now, going back to present day, we have this very clear signal that the MACD has crossed below the signal line, and it is also above the zero line. So it's not a perfect indicator. No indicator is. I'm sure if we go back far enough, we're going to find false signals where the MACD breaks below, but the stock went up. However, in most cases, when this happens, in the short term, like 5 to 10 trading days, the stock tends to go down. So the cross actually happened over here, which was Thursday, and the stock was trading at $100 was the high point on Thursday. So I think it's very unlikely for Alphabet to close out this week, which is this line over here, Friday 17th, higher than $100. Furthermore, we have this red bear channel that's been going on since the beginning of 2022, and it looks like Alphabet has fallen back into this red zone, which probably means it's going to continue trading within here because it had a chance to come back, bounce off the top of this, and head higher, which would be very bullish. But instead it fell through, and now we're back into this channel. So that is bearish. So what I'm going to do for the option for this week is look at the option chain here. At the $100 strike, I can make about 38. And since I don't think the stock is going to move up above that, I'm going to sell 100 shares at 98, another 100 at 99, and then finally another 100 at $100. So this would be 3 call contracts that I can make $167 roughly. Okay, and in terms of the put, well, it looks like we are very close to filling this gap over here. And if that happens, then the stock can drop down to $93. So I definitely want to be below there. Probably $90 is where I want to buy my next 100 shares if that happens. If I want to lower my average cost right now from 98 to, let's say, down $2 to 96, then 4 lots at $96 would be $384. I have 3 lots at 98 each. 1, 2, 3. So I need to buy my next 100 shares at $90, which is over here. But the lowest I think Alphabet can go is probably right here because that's where the previous low was over here. and it looked like the stock found a lot of support. So I will also sell this 86 put here, and that should give me about maybe $58 after commission.
Order filled.
Okay, the puts got filled at 59. I'm going to lower my calls here to 163.
Order filled.
Okay, so those got filled as well. So that's 217 after commission, and I am more bearish on the stock, which is why I'm earning higher premiums from my call side than my put side this week. The IV is fairly high this week, 46, and that's because we have inflation numbers coming out tomorrow. So I do expect a big move towards either the upside or downside, but probably more the downside. So that's $289 Canadian, which takes my total premiums over $7,200 now. Okay, so here's my current setup. I have 3 short calls up here starting from 98, and I have a short put at 90 and a short put at 86. So hopefully all of these options will expire out of the money, and the stock finishes the week between 98 and 90, which I think is most likely going to be the case. Otherwise, I could be selling some shares or buying more shares. So let's see if the MACD indicator was correct this time, and I'll give you guys another update next week. Thanks a lot for watching, and good luck with your investments.